Good morning, everyone. It's 13th February 2017, and welcome to this edition of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So first, let us go through the Nifty long-term chart. I'll take the daily chart first. Now here what I've done is it had established a range. First it broke out above this 6,400. Multiple tops in that range of 6,350 and 400. It broke out, left a balance area, so I'm not calculating that balance area, and then again broke out from that balance above 6,900, 6,850. So from there, if we draw a balance till date, then what happens is the fairest price is at 68134 and the VH at 8784, VAL at 7735. So almost 1,000 point of balance, and if you can see a nice bell-shaped curve happening. The reason to check this is because we have reached this point and trading above that and facing resistance every day, trying to push up higher but failing and coming back down, checking the supply and pushing back up. So there is some force acting in this zone. Now the highest balance established was this one. So again that same range rule applies. It breaks above the swing high. So we calculate the balance from there till it gives a gap down. So there the point of control of that balance is at 8850 kind of zone. And at present we are rejecting that. So this is the highest balance point of control on a long-term daily chart. So the candles are daily. The profile has been drawn across a range of daily bars, daily balance. And last time what had happened is when Nifty made a swing high, if you can see a push through that, consolidates a 2-bar balance, breaks that 2-bar balance with a gap. So 2-bar balance is engulfed first with a wide range bar and then it's broken with a gap. When this is happening, that means this entire area is in excess. And now we have reached the same zone and trying to accept into that. If you can see, the range is almost all the candles are overlapping each other, and every day this zone looks like supply coming in at the highs and demand coming in at the lows. So now what we want to see is what can be the next course of action. For that, there is a nice movement on the yearly VWAP. If you can see, this was a trending year, and that time the trend changes till February. It is going down. The yearly VWAP is going down. Once it starts going up, stays till the end of the year. Similarly, 2015, the yearly VWAP changes after March. So till March it is going up, changes and then goes sideways but with a bearish tone. And the prices come there, balance but reject and again fail and come back. Now, when the market is not trending completely, that is when these long-term VWAPs won't work. Because if we saw this, we could have made an assumption that once above yearly VWAP, we should always be in buy mode. But the moment we see 2015, we think that no, that cannot be the only criteria. So similarly, again 2016, what happened is market was trending and continuously the prices were away from the VWAP, came back to the VWAP in November, tried to bounce back but finally settled just above the VWAP of the year. So this is when the prices are coming near to that VWAP. That is the time we just see that why are the prices getting attracted in that zone. But apart from that, we cannot trade based on the yearly and monthly VWAPs. Now, for having a look at what is stopping Nifty from pushing through this, now let's go into the micro composites. So now these are the micro composites balance drawn when there was a balance in 2016 in this zone. So if you can see, this is the balance and that is the highest balance marked in 2016. Now let's zoom in and check. It pushes to the VH, fails, comes back, goes into this balance, lower balance, pushes to the monthly VWAP, rejects, gets back into the balance on the same day and pushes up higher. Now see the close above the VH. When the close is above the VH, expect it to go higher. It goes higher but is not still able to push through this VH. So comes back and now it's rotating between the VH, the lower micro composite VH and the higher micro composite VL. The close is right at the edge. So now one reference we have is this VH, which needs to be crossed and sustained for any further up move. The other reference we have is this VL, which needs to be crossed on the downside and sustained for any down move, and the monthly VWAP is right there, so we need acceptance below that. Once the price leaves this area, what we'll do is draw this as a balance. So these all references will be nullified and we'll get a fresh reference of this balance. Now this is also a gap zone. So a very important zone. The supply might come in anywhere between this into this 8856 and 8868 zone. Let's have a look at the Bank Nifty micro composites. Almost similar pattern, creating a balance higher, and it has tried to push through the highest balance VL, which is at 2465. Not able to push through, comes back in, goes into the lower balance, rejects the VL at 20,040 and pushes back up, close above the VH, opens gap up and settles above the VH into the HVN of 20,273. So again, similar thing, monthly VWAP is right on the downside and the MCVL at 2465 is the supply zone. Now, if we draw a volume profile from the lows till date, what is happening is the highest volume generated was on the lower side, that hence the volume POC stays down. But we have a very important HVN here between so somewhere around 19,100, and then we have a HVN here at 19,470 and a very important LVN zone here 19,860, 880, and that's why I was saying that 19,880 is important, should stay above that to keep this trend intact. We have a HVN zone higher just at 20,400 kind of zone. So that is where the supply begins. So 400 to 470 is where the supply is existent. So we should closely look at that, what happens when the auction reaches into that zone. If it starts accepting, what we need is, like, see, this push outside of the balance required volume. Now, once this volume comes, should not come back. It should stay as much as possible above that bar. And that means this volume is an initiative action, and this is what confirms demand. This volumes higher coming in lower are confirming supply. So this high confirms supply, the high of 20,470. And that's why we'll keep a close watch what happens into the upper balance. Now, while we are here, let's have a look at the weekly projected levels. So this week or the previous week, none of the highs or lows were met, though it went near the highs, but none of the levels were touched. So the range has also contracted a bit on the weekly after 2 weeks of broader range. And the weekly median range as of now is 220 points. So expecting a move of around 220 points from the close of the week. And important to note is the CCI is above 100 now and just trying to, so if it's staying above 100, it will try to trend. If it falls back down, then it confirms supply and a short and medium term reversal. Now the projected high is 8,919 and the projected low is 8,699. On the Bank Nifty, the median range is 695 points or 96 because it's 695.95, and the CCI is trending above 100. It's at 147.88. It's trending above 100, and that was the reason. See, once it's above the zero line, coming from oversold territory and above the zero line, and if you get volume, so this is how you use indicators as well, that when you are blending the indicators with the market generated information, you get a better idea because these oscillators might just travel up and down while the price is doing something else. But this gives a confirmation that if the oscillator is trending and the price move is with volume, that means it's an extreme trending market. Now, anywhere here, the turbo CCI, which is the fast CCI, is giving a divergence and trying to reverse back. So we'll have to keep a watch of any reversal before this projected high. If it goes into the projected high, then we know that it's not going to come down into the projected low in the same week. And while we are here, let's also see what can be the projected high for today. which is 20,403 and low is 20,166. Now, before getting into the hypothesis and what happened on Friday, let's also see the sectors. I was expecting pharma and IT to reverse and auto and metal to reverse. That means pharma and IT were lagging, expected them those two indices to push higher, whereas the metal and auto to go lower. During the week, expected PSU banks to go lower. Now, what happened in reality is the IT gave a nice return, rise of around 3.3% during the week and then closing at 2.90. But on the long side, the pharma is minus 1.84. So suppose if we had gone long on both the sectors at the open of the week, then we are net 1% plus. We are not net 5% plus. So still a handsome gain. So this is a safer strategy to sell one sector and buy one sector, or sell two sectors and buy two sectors. So here what happened, 1% is there. So the gains from the IT took care of the losses of pharma, whereas the metal is down. It had made a intra-week low of 2.6% and finally settled at 2.17%. So there we are getting 2.17%, and on the auto we are gaining 0.72%. So overall, a nice gain in these sectors. Now what I'm expecting in the coming week on the sectors is maybe infra to carry its move up, metals to still carry its move down or consolidate, but auto to carry its move down further, and maybe FMCG to join. I would decide on FMCG to go long or short depending on first few hours of trading today. So because this is a nice sector, if that is going to weaken, we can sell few stocks from that sector. And then I'm keeping a watch on pharma because of the holding, that if it's able to reverse, then fine. Otherwise, give up on that, because then we'll need to change. If we are getting short into another sector, then pharma also we need to leave from the longs. Now let's see which of the stocks outperformed on the lower and higher side. So the best performer is BHAL. Infra is doing good. Cement and infra might catch up. That's why this ACC is higher. TCS, a nice gain of 5.5%, and Tata Motor DVR, the major loser, with minus 6.36. So we are right on the metals and motors, auto, but bad trade for Cipla, Dr. Reddy. I'm not in Dr. Reddy, so at least Dr. Reddy didn't hurt me. But on the other side, Oro is hurting, Cipla is hurting, Divis is manageable, but overall the pharma was hurting. IT is doing quite well. So this week, maybe in the sectors, I'm looking at if the auto needs to weaken, then maybe Eicher Motors, because that is trending higher, and on the upside, maybe look into the infra sector with L&T, ACC, Infratel. So a lot of stocks there in the, so infra and cement may be combined together. And on the sell side, FMCG, if at all it comes in sell or buy side, then look at HUL, ITC. Now let's have a look at what Nifty did finally. So open within range, tries to push higher. Now this is the high is not recorded in here. The high was here at 8843. That is not recorded. So open within range, did not push above the highs, pulled down. The B period goes to check the settle, not able to gather any consensus, continuously trades higher in a B-shaped profile. All of a sudden this push fails in the H period and breaks down in the J period. Now this breakdown into the prominent POC and HVN, and gets rejected, pushes back higher, tries to go into the upper balance, fails, and finally settles near the VAL of the day. So overall a weak close, but a close above this lower balance. So that puts it into a position where, because the trend is up, though the close respective to that day is bad, but close respective to the trend is extremely good. And if you all remember, we had already done that point system on the close and the movement, that there is a 3:1 ratio for the buyers, so they are under control. Now on the 1 minute, a fall, a channeled move up, and then a big sideways move before it breaks down. And all of a sudden this spike came, instantly reverses from the spike. Now when this is happening, I was telling at this point that if this absorption has happened after the spike, it should not have gone and closed in the range. When all the bars are closing in the range, that means the supply is completely absorbed. Now only thing is we need to see where does a no demand come. So a no demand came right here. Once that high is broken, comes back, tests that high, and that is why I had shifted the stop loss here, because once that high of the no demand is tested, we expect it to break this consolidation and go into the upper balance. Now my expectation was this, to go just into this upper balance, and that was the reason to book out, because if the upper balance is here, I cannot risk, I cannot stay in the trade just because I'm expecting that it might go higher, because here we are not seeing any chance that it will go higher. I'm expecting that it will just go here. Now the probability was there that it can go higher, and it really went higher. Again, if you can see, this is the fair price, goes into that is supply, and that's why the sell here, and finally marches down. Now here I was expecting that first it reaches 13 and later reaches 8006, but it pushed lower in below the initial balance low and failed, come back up, check into the VWAP, and then finally close at the fair price of the last 30 minutes. Now there was all buying into this range, and all those buyers got stuck. Meanwhile, when this move happened, again they were able to supply into this rise, and that means the inventory is not that short. On the 15 minutes, sellers coming in here. Now we don't have any stuck buyers here. Comes down, sellers getting stuck, goes higher, again nothing. And that's why this spike to trap those buyers who want to run above this, stop running into the swing high. So this is the swing high happening. It's a fractal high here. Gives a stuck seller is there, goes and tests back this zone. So that was the day mid at that point of time. Fails, pushes lower. The buyer stepping in lower. Now this stuck seller might get stuck if the prices don't go lower. But now the seller has a chance if they want exit here. And also they got a second chance of exit. So a rise from here, stucks, gets the buyer stuck again above this high. Those who wanted a breakout, again a failure, comes back down. Again somebody wanted to sell, keep on selling here, again that fake out. So very controlled auction played by the day time frame. Goes into the 50% range of previous day, rejects. All these are signs of day time frame, and the delta whipsawing here and there. Now let's have a look at the Renko chart. Now on the Renko, impulse move down, zipper, pull back, impulse move down, pull back, impulse move down. Now here no consolidation, moves up, pull back, impulse into the day mid, a selling point. Next time pushes even through that. So this zipper makes us exit, because once this is zipping and pushing higher, that means the chances that it will push through. But when it fails into the day mid, again there is a chance to sell at the test back, and then you get an impulse, pull back, impulse, pull back, impulse. You get a zipper here. Zipper is crossed again, by triggering there, creates a zipper but above this zipper. So that means buying is coming in. Impulse reaches here into the supply zone, creates a zipper, again the sign that once this breaks you are into a sell mode. Zipper down, pull back into the developing VPOC, and then again an impulse down. So very orderly on this, apart from this zone. This is a nice balance, but quite tricky if we had a stop loss here. Now let's see what we can expect for today. Now, as per the SGX, the open can be above the swing high. So what I'm expecting is, if not above the swing high, at least above this consolidation. So if it opens even in range or out of range, what we'll look at is how to build up through here. So opens into here. If it opens higher, suppose if it opens way higher, like above 8850 even, then I'm expecting to test this, fail, push back up, retrace back, and then push through that 8860 and go towards 8880 and check what lies there. Suppose if it pushes back in, tries to pull back up higher, comes back into this zipper, pushes back, fails, goes into the 8815 zone, tries to pull back, keeps on going into the 8790 zone. That is the expectation in both cases of this open. So even if it opens here, then we consider this, that it does this and starts this move. And any acceptance below this would try to push into this, wants to check this into the 8770 zone, try to pull back up, fail, and then make its move into this balance of 8795. In case it pushes into the 8760 zone, because see there is a nice consolidation into that zone. So if it pushes into that, then I'm expecting it to test the lows near 8740 and pull back. Any move below 8740 would make it go lower, even maybe around 870510 kind of zone. On the higher side, if it accepts even 8860, 8880, then expecting it to keep on going higher above 8900. So that is the expectation of the move. Let's have a look at Bank Nifty. Again the same thing, open auction in the range, and it tries to push higher into this fair price. There are single prints here and you have a prominent POC. Rejects there, comes back down, is not able to push into this. So very mechanical in the initial balance. Pushes back up, creates a short covering profile but below this prominent POC. Cracks down from this consolidation, tries to pull back up into the value, fails, pushes back down, pull back, pushes back down into this. If you can see, there is a ledge, a minor, not actually a ledge, but we can see a floor has been built here, because you can see this range high is here. Now these pullbacks are here, so all the support zone has been stacked here. So pushes into that, fails and makes its move higher. Again not able to push through this supply and comes lower, settles in a weak close below the previous week high. So overall showing bit of weakness here, but on the other hand it is trying to repair this emotional structure. So we need to see what it does below 2175 to take reach any conclusion of whether it wants to travel through this lows or not. Now on the 1 minute, a nice triangular balance, breaks down, no supply into this when it breaks down, because it is coming into this zone. So very mechanical, and that was visible on the profile chart as well. Channeled move up, goes into a sideways consolidation for a long time, fails, comes back down, spike coming in, instantly gets rejected, pushes higher into the fairest price but gets rejected, and then makes its move lower. When it's coming lower, again the same thing happening like Nifty did. When you have a spike and once we push through that, then that means we are going to push higher into the upper balance. That is what happened. We went into the upper balance, again rejected from there, came down, coming into this lower balance. That is why it's not pulling down into this, because there is no acceptance here. So it's coming into that, rejecting and pushing higher. Now this was not able to push to the VWAP, but pushed into the day mid and a close right there. On the 15 minutes, the buyers getting stuck here, all emotional buyers getting too high to buy. Again the sellers getting stuck here into the 50% of previous day, goes back up, buyers getting stuck, and see how the demand is dropping. Complete volume drop. When the demand drops, all of a sudden breaks down into a spike, sellers getting stuck at the lows, pushes into the developing VPOC, buyers getting excited to buy there but not able to push the prices higher, and failing coming back down. So overall, a very balanced auction with a skew on the upside. Let us I don't think that we need to see anything apart from that on this. So let's get into the Renko. A very messy trade, I was going to say, before looking at the chart, because I was seeing that day and it was not tradable for me. A messy zipper here, pushes into an impulse, but now we don't know whether this will turn into an impulse and push higher. Pulls back, another impulse, creates a zipper, fails, impulse, pull back, impulse. Now this was a clean move. Again, now this move all of a sudden, so difficult to catch, but if we could have caught it here, but then again when it turns into a zipper, again difficult to trade. But then the clean move was this breakdown, pull back, impulse, zip, pull back, impulse. Now again zip at the lower side. Once through that, we expect again an impulse, zip, impulse into the day mid. That is what I would expect, not going higher, but finally it made to the developing VPOC. Again from there, rejection, impulse, pullback, impulse, pullback, impulse. Again pulls back to the same point, go into the day mid, and again an impulse. So this gets interesting if somebody is able to like exit the half of the positions and again reaches their point, then again sell it. Now obviously not so easy to do, and especially during the end of the day when the orders are getting sweat off, it's the chances are like much lower of a win, because all of us this whips happening, we won't get fills. Now the expectation for today, if it opens into this, suppose if it's opening into the above the 400 zone, so then I'm expecting a push into this, fail, come back to test, and then make its move higher above 2500 and face resistance into that 470, clear that and push towards 20,600. In case if it opens somewhere into here or even higher but fails here, comes into this, is not able to push back, then I'm expecting it to come into the 2328 zone, try to push back, fail, and come into the 2305, then slowly and gradually come into this, start whipping. So I'm expecting a whip into this zone again, and then finally make its move down into the 2175 kind of zone. If it fails there and rejects, then come back into the 2250 zone, and otherwise if it gets accepted here, then test the lows here into the 20050 zone. Any move below that would push it further lower into the 19880 kind of zone. So that is what can be expected from the bank nifty. So that's all for today. I have taken a lot of time, but do watch this, because this is just I'm keen to explain the process of how the auction was behaving in Nifty, and that's why I thought it's better to explain in this digest. Anyways, thanks, and we'll catch up during the day, and have a profitable trading day ahead.